The most important thing, if you don't have a good toolkit to deal with loss, is that now you have the loss aversion that may affect the next decision. You may actually become emotional, which could affect the next decision. In combination, or even in any one of those two alone, can cause bankruptcy.
Hey guys, welcome back to the channel. Today we have Chamath on the S&P Global Ratings channel talking about the future of finance and his investment thesis for the current market. Chamath discusses his path so far as an investor and why so much of his success was attributed to being early. He talks about the importance of risk management and why preserving an incredible amount of the upside of an investment will allow you to generate substantial returns. Heading into 2023, nearly a year after accurately forecasting this year's meltdown in global markets, the billionaire investor says he's positioned to capitalize on a major market rally. Although Chamath is bullish on the stock market, he predicts the rally will likely be unsustainable. He says that the US will likely see a huge recession next year due to the impact of the Fed's rapid interest rate hikes to the economy. Let's check out this interview with Chamath as he talks about his market strategy and the blueprint to the success he's seeing today. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
As an investor, I think in order to be extremely successful, you have to understand both your strengths, but also your biases. And then you have to tune your style of investing to a type of market that benefits from those strengths and where you can control your biases. So, in my example, very early on at Facebook, and then in the early parts of Social Capital, what I proved to myself is that I had quite a bit of a knack of being early to things, early to trends, early to ideas, being able to iterate and build, small versions of things that could then grow and become big things. And that gave me a lot of confidence that I generally could see a little bit around the corner before a lot of others. Not, years before, but months before, and that's enough of an edge, right? So that was a strength. My bias is really that I tend to be very dogmatic around certain ideas, and so I had to find a way where I could minimize my losses. And the different way of saying that is I had to always think about returns as the northern star, irrespective of what I invested in. And so technology investing, early stage technology investing, actually brings these two principles together into one art form or practice, which is you have to have this propensity to be slightly early before the mass market of other investors realize that something is important. And by being slightly early, so that's one of my strengths, you actually can do an incredible job of risk management by preserving an incredible amount of the upside of making an investment where you can generate these crazy returns, but where your downside is still 1x and you're really not losing that much money if you're wrong. And so it allowed me to manage to this tendency that I have to be a little sticky in things, and it allowed me to exploit the strength that I have of being a little bit early. And so that's how I run the business. For me, the northern star is returns. You must generate best-in-class returns across vintages, across asset classes, across security types. And that is the key differentiator of people that are exceptional. And that's what I would aspire to be able to look back and say to myself is that I'm really good at this craft. And I think in another 10 years, I'll know whether I'm really good or not.
Chamath goes on to say that throughout his wins and losses, when he places bets in the market and has limited information, he has a mathematical poker strategy he uses. These quantitative methods are extremely important and allows him to recover quickly from a loss, especially in light of the recent economic headwinds.
The most important thing, if you don't have a good toolkit to deal with loss, is that now you have the loss aversion that may affect the next decision. You may actually become emotional, which could affect the next decision. In combination, or even in any one of those two alone, can cause bankruptcy, right? You lose money. And poker is a great microcosm of that because that dynamic can play itself out in a 2 or 3 hour session. So the reason I love it so much, obviously there's camaraderie and I love the competition. I mean, look, I'm an extremely competitive person. There's no doubt about it. and I love crushing people and I love crushing souls at poker. But I love the challenge of maintaining mental equilibrium and equanimity through wins and losses. And there's a strategy around poker that is extremely mathematical and very market oriented, where you have limited information and you're trying to, make educated guesses, and you're trying to size bets in an educated manner. So the theory is incredibly beautiful and dynamic. So I would encourage everybody to learn to play the game, especially anybody who's interested in investing, because it will test both sides of your brain, the quantitative part about how to think about risk and risk management, and the emotional part about how to deal with loss. And if you can get to a good place on those two dimensions, you can be an incredible investor, I think. And poker is a great way for me to test where I am in that at any given point in time. I worked at an investment bank for a year, trading interest rate derivatives. It was incredibly important for everything I did later on. But then literally what happened was I got zero bonus that year, because my ego was a little out of control. And another huge blessing in disguise. And so I just applied to all these jobs. I said, I have nothing to lose to stay here. And I got a job at Tipco, I think, and eBay, and a small music startup. And it was a 11 or 12 person company. And I thought, the music startup, I'll have a better edge because I'm one of 11, 24-year-olds, whereas everybody else, I'd be working for much older people. I didn't really know the political dynamics. And so that's how my career started. I worked at this small company. It was part of AOL. I rose through the ranks at AOL. I ran the instant messaging business there. During that time, I did a big deal between AOL and Facebook. That's how I met Zuck in 2005, 2006, through my friend Sean Parker. And then I joined Facebook, and I worked there for 11 years. Oh, sorry, for 5 years until 2011. And then in 2011, I said, I had learned at that point how to build businesses and how to build startups within businesses, but I'd never started my own startup. And so, I kind of put these two passions together. I'd always wanted to be an investor. I'd always wanted to be in Silicon Valley. I really wanted to figure out how to start my own business. And so that's how Social Capital came together in 2011, June of 2011, and I've been doing it ever since now for almost 12 years. I do early stage investments, late stage investments, crossover investments, and in some select cases, public investments. But the unifying theme are twofold. One is that I try to partner with really compelling entrepreneurs that I believe have the potential to build something great. And number two is I try to underwrite a business that is early in a theme that is much, much bigger than themselves, right? Which can create a lot of value. The problem is that I think people misunderstood what I was doing and interpreted it as essentially, a very simple mechanism to capture some economic value.
Chamath is a highly successful entrepreneur and venture capitalist and was ranked 10th on Forbes magazine list of new billionaires this year. After finding Social Capital in 2011 to invest in companies in fields being ignored by other venture capitalists like health, financial services, and education, his firm has since expanded to invest in tech companies like Amazon, Tesla, and Slack. Chamath has created platforms to provide an alternative growth path for companies to go public while continuing to make public and private investments with a broader focus on crypto and decentralized finance. What do you guys think about Chamath's financial journey so far? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.